Hey guys, on today's episode, we are going to take a quick look at Zoom Video. The stock price is down about 16.28% today after reporting earnings yesterday after the market closed. That is down over 56.57%. So on today's episode, I want to take a quick look at what some of the yellow flags that investors should keep an eye out, maybe some of the green flags that also came out through investing, so the bad and the good. I don't think there was anything too crazy to really kind of drop this price outside of its valuation. And at the end of this episode, I'm also going to share about my overall thoughts on the company's stock price right now. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and let's get started. So Zoom Video, full disclosure, it is in my portfolio, but a very small position, right? Less than 1%, is nowhere near any of my biggest holdings. So just wanted to let that out right now. Currently has a market cap of about $86.5 billion. So if we take a look at their earnings, they gave revenue of over $1 billion, $1.02 billion, and that actually beat expectation. Earnings per share were $1.36 compared to the $1.16 expected, which also beat expectations, right? So they had strong earnings, they beat expectations. So why is stock price down? And I do believe one of the biggest impact, and unfortunately, it seems like the market we're in right now, investors just want more than just a small beat, and when it comes to guidance, they want a lot more than just a small increase. So for quarter three of fiscal year 2022, which is next quarter, they expect about $1 billion, a little bit over $1 billion in revenue again. For the full year of 2022, they expect about $4 billion in the revenue. And they did increase this kind of guidance compared to what they previously had. Previously, it was about 3.9, a little bit less than $4 billion. So they did increase their 4-year guidance by a bit. And in the top end, this guidance is also beating analyst expectations. In the low end, it's not. So I believe this kind of expectation not being stronger than what analysts expected is causing a bit of that kind of pullback on the stock price. This is another yellow flag I wanted to take a quick look at. Even though revenue grew 54% compared to the same time last year, that was huge growth. Quarter over quarter, it's only grown less than 10%, and that's kind of showing that quarter to quarter growth. And I think for a company like Zoom and anybody that provides some form of services, the quarter to quarter growth is probably the biggest showing of how strong the company is growing. And we can see from quarter one of fiscal year 2022 to this quarter two, it grew less than 10%. And I do believe last quarter four to quarter one, it was barely making 10%, but every quarter before that, this company was growing at over 10% quarter over quarter. So that's kind of showing, hey, there is a bit of slowdown right now. It's definitely slowing down to that high single digits. Another reason investors might be a little bit scared off, especially with this being a growth story. And all that together, right, the kind of guidance not being a huge beat, even though they did beat expectations on current earnings as well, we did see a lot of analysts coming out with a lot of price target decrease. And before we take a quick look at anything else, let's listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. This one was from 464 down to 369. This one was to 315 down from 345. This one was at 350 down from 450. This was 350 down from 400. This was 385 down from 485. This was 460 down from 495, and this was 398 down from 428. So a lot of analysts come out and kind of just that overall bearish sentiment. Overall, I mean, earnings right now from what we can look at, and we're going to look at the charts a little bit more in depth in a bit, don't look half bad. It's not like this company is going down under. It just seems investors were expecting a little bit too much. And that's what pretty much creates volatility here in the market. And this is what either creates some great buying opportunities, or sometimes when the market is really, really high, that volatility, which we saw last year on growth stock, kind of creates a great shorting market, for example, when prices were over the top in valuations. Another thing that actually ended up happening is they for those not familiar, Zoom Video is going to acquire, or has the plan to acquire, Five9. And recently, I think it was either Monday or Tuesday morning, the Federal Communication Commission denied permission for a streamlined processing of the merger transaction with Zoom Video, and they will have to go through more further consideration or further investigation. So Zoom was kind of just hoping, hey, the commission was just going to be like, yep, okay, there's nothing insane for us to really look into it, so the merger can go pretty easily. What's ended up happening is now they just have to do a little bit more of an investigation on it. It doesn't mean the acquisition is not going to go through. It just say, hey, there's a little bit more time and a little bit more information we have to dig up to. I want to say a lot of acquisitions go through this process. But again, it kind of increases the chance, that risk increases, right? The risk increases of that kind of acquisition not happening. I don't think it's not going to happen, if that makes sense. But it just increases that chance, and with the increase of unknown in the market, it usually decreases stock prices. So I want to say this is the other thing that affected Zoom right now. Now, I do want to take a quick look at some green flags for Zoom, right? There's definitely been a lot of strongness. First, customers with annual recurring revenue of over $1 million has grown 77% compared to the same time last year. Strong growth. They are seeing strong performance in their Zoom Phone and in their Zoom Rooms. Zoom Phones, for example, look, it is growing strongly, over 241%. If you take a look at customers with over 100,000 revenue in Zoom Phone annual recurring revenue, and that is up 241% year over year, and is also up 32% quarter over quarter. So Zoom Phone has become a really strong driving force for the revenue growth in this company, and I wouldn't be surprised if this continues to accelerate at these levels. We can see they are even growing with customers that have over $1 million in Zoom Phone annual recurring revenue. That is actually insane. Another thing, like we mentioned, that revenue growth I mentioned as a yellow flag was quarter over quarter growth is kind of slow or slowing down, but it's still a beast, right? Look at this chart. It's been amazing, the overall growth of the company. Another thing I want to mention is the overall, they are expanding, right? Rest of the world has grown a lot. Year over year growth grew 62% compared to the same time last year. The Americas grew 50% compared to the same time last year. So they are growing their international presence. And another thing I wanted to mention was this company's cash flow, right? They made about roughly about $1 billion in revenue. Operating cash flow was about $468 million. So they have over 45% of operating cash flow margins, and they have about $5.1 billion in cash and cash equivalents. So fundamentally, Zoom is still in a strong place. I do want to mention, it's just what happened last year. Crazy stocks went overvalued, and that's what really is kind of the short-term negative term on Zoom, right? We can see, I remember pre-COVID, right? Pre-COVID, early March, before COVID, high stocks were valued very expensive. Even growth stocks with the price to sales ratio of over 10 was already kind of seen as super expensive. And pre-COVID, that's where kind of Zoom was sitting at. Now you can see during this COVID extension, it went all the way up to about a 40 price to sales forward ratio. So obviously in hindsight, we can see how that doesn't make sense. And we can kind of take this as future learning experience, right? Things like this are going to happen every so often. So we should try to grab this information that we found out right now, especially to some new investors. But right now, the forward price to sales ratio after this drop for Zoom is about 18.14. I mean, I don't think obviously it can go cheaper levels, but we're kind of getting back to those, hey, low teen levels. So if one was bullish in Zoom, right now, I would say a good portion of the risk has been eliminated. Obviously, volatility can continue to happen, and this is not going to be growing at crazy levels anytime soon, right? Because if we take a look at this revenue, let's take a quick look at the revenue charts. Quarter 2 and quarter 3 were already kind of really seeing that strong growth from due to COVID expansion. So now quarter three of last year compared to quarter three of this year, it's going to be, I want to say, less than 54% year over year growth, right? So that kind of growth acceleration year over year is also decreasing, and that's something investors might not like. I do believe for the next few quarters, I wouldn't be surprised if Zoom kind of stays around this price ratio of about mid to high teens and the low 20s. That's where I could see the stock price kind of going. But in the long term of things, earnings weren't that bad. So let me know, what are your thoughts, guys? And are you buying? Are you selling Zoom right now? What are some of the biggest bearish flags you found? So take care, guys. Have a good night and see you next time.